I'm just starting the recording, so we'll have the recording available for everyone too. Okay, so first I want to thank everyone for taking the time out of your busy schedules and family to attend this webinar. What this webinar is pretty much to discuss the heat map and the email modules and pretty much everything that's available on ichimokutrade.com. So bit by bit, we're going to go for all the features, functionality, kind of talk through it. We'll look at some charts and show you how that relates to charts. Look where entries would be, stops, and so forth would be. Okay. Now, even though this is the heat maps available on ichimokutrade.com, you don't necessarily have to know Ichimoku or use Ichimoku at all. You have the luxury of using your own technical system for these signals too. It works very well with them. Okay. So we'll talk more about that in just a minute. But I just wanted to take the time to kind of go through and have a live webinar to discuss everything that's available on the website, because we have been going through a couple of changes. We've made some drastic improvements based on customer feedbacks, and we're continuously doing that as time goes on, providing more features and functionality as on a quarterly basis as we move forward. Today, if you look at the heat map and the stock scanner side, we pretty much have everything available for the currencies, all the major pairs, around 36 of them. We have futures, all the futures on the U.S. side that deal with metals, commodities, heating oil, gas, crude oil, and so forth. We also have, I'll show you here, S&P 500, the U.S. S&P 500 list of stocks. We have the Dow 30. We have the country ETFs. This kind of covers all the ETFs dealing with all of the various countries out there. And then we also have sector ETF based on the Dow Jones. So these are all the particular instruments that we have available today. We are going to be looking to expand in the future, where we will be supporting a lot of international markets. Our goal for Q1 of this year is to start supporting everything in Malaysia, Singapore, possibly Australia, Indian market, and also UK market. Those are other markets that we're very live with and very active with, so we're looking to branch out and start supporting particular stock markets out for those particular countries. If there are any particular countries or any products that we don't have, and that's that you're interested in, you please send us an email at info@eiicapital.com, and we'll put that on the list and definitely look at that and evaluate everything. What we do is we get all the feature requests, and what we do is we evaluate them at the end of the quarter, and we start implementing the following quarter based on user demand and so forth. So the website is basically all the features, functionalities are created from user demands, which are pretty much what traders need to actually trade. We're not going to create anything that's theoretical at all, but only tools that traders really, really want. Bill, yes, we're going to be looking at Canada too. Sorry, I left out Canada. Yeah, so we'll definitely be looking at Canadian stocks too. So, as I mentioned a minute ago, all the tools that we have on the website are tools that I use, all my students use, and everyone else uses. Otherwise, we would not have these features and functionality on the website at all. So this is a trader's website with features and functionality available for all traders to use, whether they know Ichimoku or not know Ichimoku at all. Okay? Do you guys have any questions before I begin? And what I'm going to do is I'm going to take the website and kind of go through it step by step and kind of go for everything. The first thing we'll discuss is the heat map, and then we'll talk about the email module that's in beta form that we're about to release this month, and then we'll go for the stock scanner side. We'll go for the market outlook, the videos, and the help and stuff like that. No questions so far? Okay, great. So the whole concept of Ichimoku Trade was to help find opportunities out there in the market, and the whole concept was to find high probability concepts too. We did not want to venture down in creating automated strategies where we tell you exactly where to buy, exactly where to sell, and so forth. We didn't want to go down that route. The reason why is almost everyone else is doing that. And we really don't feel like that's adequate at all. And the reason why is that each trader has its own personality. And if we provide a generic set of signals for people, it doesn't necessarily mean it's going to fit your personality. Some people like to do counter trend. Some people like to trend. Some people like to do swing trading. Some people like to sit there and play on tick charts. Some people like to play on 5 minutes, 10 minutes, 30 minutes, dailies, weeklies, and so forth. So, each trader has their own personality when they come to trading. And really, the problem with a lot of the automated strategies out there is they fit one particular trader's style. And we really didn't want to do that at ichimokutrade.com. What we wanted to do was to kind of provide a white box / gray box solution where we provide opportunities for you, and then you, based on your personality and your trading plan, you could take some of these trades or not. Okay, so these are signal opportunities, and you could kind of look at it as a glorified scanner, which will find all the opportunities for you. Okay, now when we talk about opportunities, a lot of people ask, is it for a 5-minute chart, 10-minute chart, daily, weekly, and so forth? It's actually all of the above, and we're going to talk about that in a minute. And we'll give you an idea of how this heat map works, all the time frames we support, and go from there. Okay? Is that okay with everyone, or is anyone confused? Okay, good. So the very first thing what we're going to do is we're going to start and go through the heat map. Okay, now the heat map is pretty unique, and let me enlarge this just in case you guys can't see this. First, let me go through this. The heat map is a browser, the Ichimokutrade.com. The heat map and everything is available for a web browser. It's best used in Google Chrome and Mozilla Firefox. It does work in some versions of Internet Explorer, but Internet Explorer, depending on what version you have, you might have to get into some hiccups and stuff like that, trying to see some of this heat maps and so forth. So I personally use the Google Chrome, reason why it's very light and provides all the features functionality without a huge resource overhead that's available out there. Okay, so everything I'm going to do is going to basically be in Google Chrome. Okay. Now, of course, in Google Chrome, you have the ability to enlarge and shrink your screens. All you do is hold down the Control key, press the plus key or minus, and it enlarges the screen and so forth. Can everyone see my screen right now? Yes. Okay, great. Now, what we're going to do is we're going to go for the basics of the heat map and go from there, and then we're going to start drilling down into a lot of more the sophisticated part. But we're going to start and build the basic blocks of what the heat map provides, and then start building into sophisticated multiple time frame scenarios. Okay. There is an email module behind this, which will do a lot of the features and functionality that we're about to do by looking at this heat map, and we'll talk about that in just a minute. Okay. If you look right now, what we're gonna do is we're gonna go for the currency heat map. All the heat maps are the same. They work exactly the same thing. So it doesn't matter, even though we're talking about currencies here. If you're only interested in stocks, don't worry, it works the exact same way. If you're interested in only futures, it works the exact same way. So it's independent of the particular instruments that you're looking at, okay, that we're about to go through. Okay. So now, if you look here, the time frames that we provide are 10 minutes, 30 minutes, 60 minutes, 120, 240, daily, and weekly. The reason why we provide these time frames only is this is what we call fractal wave trading. Okay, these are the time frames that basically we use, and we find them very, very effectively, especially at the institutional level. Okay, now I know a lot of people use the 5 minutes and 15 minutes. Unfortunately, that's not. We've done research on that side, and we really don't find them too effectively for long-term trends at all. And what we can do is with these time frames here, we could get a glimpse of the entire picture of a particular instrument. What is happening on the short-term time frames, and also what's happening on the mid-term and also the long-term time frames. So these time frames here actually give us an entire view of what a particular instrument is doing. Whether the lower time frames are going to influence the higher to a point it pushes it past the support resistance, or the higher are influencing the lower. Okay. Now, if you don't know what that means at all and you're a beginner, don't worry about that. Remember, the audience that we have today is we have some beginning traders and we also have some advanced traders. So I have to talk to both levels completely. So just be patient. If you don't understand some of the terminologies or that, ask me. Or don't worry about them, because the email module actually simplifies everything to a point. We level out the playing field for both beginners, traders, and also advanced traders there too. Okay, so these are the time frames we provide. If you look at the top, this is kind of like a simplified legend here that we have. Red basically means the strategy is bearish. That means you bet only on it going down. Green means basically the strategy is bullish. That means you could only bet on it being going up, which is bullish. And basically white means it's neutral. It's consolidating. There is no strategy there on that particular time frame. Is everyone okay with that? Okay. Now, if you see any of these letters here, like in this one, over here, that are in yellow, where the numbers are basically in yellow, that means it's overextended. Okay, so if it's green and yellow, that means basically the situation is it's been overbought. Too many people have bought, and it's basically it's too late to get in to buy it, and you really need to sit there and wait for a pullback, a correction, or profit taking, whatever you want to call it. Okay. If you have it red and then the letter is yellow, that means basically it's oversold. Too many people have sold this particular instrument, and now you need to wait for a pullback upwards or basically a profit taking or correction to take place. Okay, I gave you 3 different definitions. Reason why some people think know what a pullback is, some people don't. Some people know what profit taking is, some people don't, and correction. So, depending on what school of training you've gone through, your terminology may be different. So that's why I'm kind of telling you these scenarios, you're looking for a pullback, correction, or profit taking. They're all the same thing, but just basically called differently. Okay. We had a question from Fred. When is it appropriate? Can you talk more about why you do not use 15 minutes? Well, Fred, the thing, remember I just mentioned to you, we've done a lot of institutional research, and what we found that these time frames here, they're fractally proportionate to each other, and they give you a glimpse of the entire story of what a particular instrument's about to do. 15 minutes, you can use 15 minutes, but we found that basically using a 10-minute it works out a lot better, or a 30-minute works out a lot better than a 15-minute chart. And unfortunately, I can't provide that research reason as part of the institution I used to belong with. Okay. And what you can do is, remember, you always want to validate what a speaker says. So go through and look at some 10-minute charts and 15-minute charts, and look at 30-minute charts, and you'll see what I'm talking about. Okay. And if you look on a 10-minute chart, basically the average from the currency side, the average number of pips that you'll get with a 10-minute chart are anywhere from 20 to 40 pips. Okay. And that's a good number of trend. So 20 to 40 pips allows you to very much not worry about the commissions, the spreads, or anything like that. It also gives you the ability to have a good reward-risk ratio when you're trading for money management. But if you start getting lower, then what's going to happen is you're starting to shoot for lower number of points where commission really would start to become starts to matter more and more. So the way we trade is we really don't worry about commissions at all. Reason why is our profits take care of the commissions. So anything lower than 10 minutes, your trend potential is a lot less than the 10-minute, and at that point, every little commission, every little penny starts to matter. Fred, is that okay? Great. Okay, so now let's go back to this. So we've discussed the color code scheme here, where we've gone through white basically means no strategy, red means basically you could bet on it going down, and green means basically you could bet on it going up. If you get a letter basically in yellow, that means basically it's overextended. Okay, now that's very, very simple. Okay, now here's where this gets a little confusing for people. And remember, these are Ichimoku strategies. Okay, you don't need to know Ichimoku at all, but this is basically how everything's defined. When you get a number 2, 4, or a 5, okay, and really it's a 2 and a 4 is what you look for the beginning of a trend. 5 could be a little later in a trend. So really what we tell people is to look for a 2 and a 4 on your trading time frame. And if you get a 2 and a 4, that is the beginning of a trend. Everyone okay with that? Okay. A trend, if you don't know what that means, is basically if you get in an instrument and you're betting on it going up, it slowly goes up with time. Okay, so you enter and basically you get profits, profits, profits on a daily, weekly basis, or whatever be the time frame you're in. But it's an upward movement with slow progress. A downward trend is basically where you get in and the instrument pretty much goes down with time. Okay, basically those are what trends are. The other thing opposite of trends are basically consolidation patterns where they just go in a sideways movement. Okay, now a lot of Ichimoku trading is all about trading trend patterns. And the reason why is that's where you get the best reward risk ratio, and that's where you could sit there and become a consistent profitable trader is by doing trend trading. Okay? So if beginners always should start off in trend trading, advanced traders always should be sitting there doing 50% of their portfolio in trend trading too. The other 50% of your portfolio as an advanced trader, you could kind of mix it up with counter trend, but a lot of your portfolio should still be having a lot of trend signals in there. Reason why is with trend trades, you get in with one contract and you pretty much get on this train until it gets to the very end. So that's where you maximize your profits the most by going in with very little risk. Everyone okay with that? Okay. So you really want to look for in a 2 and a 4 for a trend opportunity. And then if you're a counter trend trader where you're an advanced trader, what you're going to be looking for are zeros, ones, and threes. Okay? I love it when I get a 0 and a 1. Zeros and ones are what I really look for a lot. If I don't find that many zeros and 1, then I'll go to 3. Okay? Same thing on the trend side. I like the 2s and 4s. If I don't see many 2s and 4s and I'm looking for a trade, then I'll go look for 5s. But I really don't look for a 5 at all for a beginning of a setup. Okay, and same thing for counter trend. I like zeros and ones, and I really don't go for a 3 unless I can't find any opportunities with a 0 and 1. Everyone okay with that? And we'll talk about counter trend in just a moment. Okay. Just everyone, if you're okay with everything, just let me know. Pretty simple so far. Okay. Now, each one of these, now when I say, and let's concentrate on the trend opportunity, so we're going to concentrate on 2s and 4s. Now when I say you get a number 2 and 4, it doesn't mean you're ready to sit there and get into the trade at all. Okay? It means there's an opportunity there. Okay? So let's go look at an example. Let's go look at something on the daily time frame, which is right here. And this is basically, actually, let's go look here for a 2. A 2 here. And this is EuroCAD, okay? And that's a daily time frame. We'll flip to that chart in a minute. Now this is green. That means you're going to be betting on it being bullish, okay? Now when you get these signals, it doesn't mean they're ready to go. That means you enter right now and then. What that means is that if there's an opportunity waiting for you there. What it still has to do is if it's green, it's got to break the last resistance, okay, with a buffer. If it's red, it's got to break the last support with a buffer. So let's go look at some of these opportunities like the EuroCAD on a daily time frame. We've got a 2. So I'm going to pull up my chart. I'm using Thinkorswim from TD Ameritrade. You could use whatever charting platform you want. I'm going to basically come here, and what I'm going to do is this is daily time frame here, and the heat map is telling me that there's an opportunity here to start a trend going long. Everyone okay with that? That's a number 2 on the heat map here. Okay? Now, that means there's an opportunity there. So what I have to do is look at the current bar, find the last resistance, which is this pivot high here. A couple of points above that would be my entry. Okay? Now, we did not sit there and tell you exactly what the entries are. We have not gone through and tell you exactly what the stops are. Reason why is there's no way we could sit there and tell you that. Reason why is everyone has different personalities. Everyone has different risk tolerances. Okay? So it's up to you and your system and basically on how to do that. If you want to know how to do it with Ichimoku, then we could follow up with you and talk to you more about that on a one-to-one basis on how to use Ichimoku to sit there and know exactly where the entry is and where the stops are. Okay? But if you have your own technical system, you could sit there and figure it out yourself. Yeah, David, there's no Ichimoku indicator on here. And the reason why is, remember, we're doing this to kind of show you that anyone could use this service. whether you have Ichimoku or not. Even though Ichimoku strategies are used to generate these signals, it's independent really of your entries and so forth. So whatever technical system you're using, you could still continue to use that. Okay. Now the simplest form of stops and entries are just to keep on using these pivots. Okay. You have these pivot highs and pivot lows here, which is these triangle formations. What you could do is use your entries and stops using these and just use a buffer off them. So for an entry, if you know this is bullish, take the last pivot high right here, a couple points out as your entry. Your stop would be right now, the last pivot low right here, a couple points below that will be here. So this would be your stop. And this is the simplest form of technical analysis. And of course, you could use any other system for entries and stops for money management. But this is the simplest form I'm going for right now, which is pure price action. Okay? And what will happen is this is your entry, and that basically is your stop. Okay? And what you do is when you enter here, you could keep on using a trailing stop. As soon as new pivots form, you could keep on moving your stop up, 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 up until you get to a point your stop is above your entry, and that's a free trade. Fred, I can show you with Ichimoku, but I prefer pretty much to do that one-on-one. Reason why is it gets a little more detailed, and I really don't want to bog down this call going for Ichimoku with the heat map. But we could show you that individually if you like. And if there's a lot of people requesting that, what we do is follow up with another webinar with that. Okay? And if we have time, I'll go ahead and do that in the end, but I want to kind of leave it towards the end, and we'll do that. Everyone okay with that? Yes? Okay. Okay, let me do that. So that's the very simplest form. So remember, each one of these are opportunities. It doesn't mean they're ready to go. The charts still have to prove themselves and break the last resistance for a bullish opportunity. Okay? If we look at a bearish opportunity, let's go look up this one here. That's the Euro DKK. And if you look here, this is a bearish opportunity here. And in this scenario, what it's got to do is break this last pivot. This is a minus pivot, so this couple points right there, that will be entry to go short. Everyone see that? Okay. Yes? No? Maybe? Okay. Now on this one, it's had an upward movement, okay? So this one here, you have to basically determine where your stop's going to be, okay? You could have basically used this. This is the minor pivot here, a couple points above there. It could be your stop, whichever may be the case. But it's up to you to figure out the entries and the stops on basically using the heat map with your own technical system. If you like, you could discuss that with us, and we could give you some ideas, either using Ichimoku or using either pure price action, which are pivot points. Those are the two probably best methods that you can use to determine entries and stops and so forth. Everyone okay with that? Yes? Okay. I'm going to move on then. Now, here's the best part. Okay, so you could see exactly what's going on time frame by time frame. Okay, and you could see here that basically on the daily time frame here, this is red. Everyone see that? And this is a bearish strategy, bearish trend strategy, ready to go. Hasn't broken the last support, but it's set up. Everyone see that? Okay. Now, a lot of people don't know how to do multiple time frame analysis. And believe it or not, in order for you to be a successful, consistent trader, you really need to know how to do multiple time frame analysis. But a lot of people, when they attempt to do that, they get confused. The reason why is sometimes the lower time frames influence the higher, and higher influence the lower. So people really get confused. Believe it or not, with this heat map now, you have the ability within a couple of seconds to determine if there's a multiple time frame opportunity or not. Okay? And the reason why this was created was Ichimoku stands for at one glance. The whole idea of Ichimoku was to simplify trading. And what we did was we came up with this heat map in order for us to simplify our trading and find multiple time frame opportunities. The reason why is the more time frames that you have in sync, the higher the probability of success. Does that make sense for everyone? Yes? Great. Okay? So if you have 2 time frames, that increases your probability from 1. If you have a 5 time frame buy and sell, that gives you a huge possibility of winning. And also the bigger bang for your profit because it has the potential of going a lot higher. Okay? So if you look at some of these opportunities here, this was a trend trade on a daily that was ready to go. But look at the weekly. What color is it? It's red. So you could see that on one side you have a green, one side you have a red. That's conflicting. So that's definitely not a multiple time frame opportunity. You guys see that? Your multiple time frame opportunities start with 2 time frames having the same color. If they don't even have the same color, there's not even an opportunity waiting for you at all. So if you go down this list and you look for the daily and the weekly to be the same color, right? You find it here where it's green, green, but you have a 5 here, you need a 2 and a 4, right? And if you keep on going down, you got a 4 here, but this is green. So you can just keep on going down, down, down. Here's an opportunity here where they're both red, okay? And also on a daily, you got a strategy waiting to kickstart. And this is basically the Euro SEK. So this is a multiple time frame sell opportunity right now that's occurring. Okay? Fred, are you talking about scrolling down or wider? Wider. Okay, how's that look? It's probably the widest I could get it. Is that better? Okay, great. So if you look down here, this is a multiple, if you're looking at the daily time frame, this is a multiple time frame opportunity right here that's live right now, which is an opportunity waiting for you. The weekly is bearish too, and it's in a trend because it's a 5, right? And the daily is in a 2. So if you look at the Euro SEK, this is an opportunity waiting to happen. What you could do is take the last pivot here, a couple points below that would be your entry. If you put an entry here, you're still going to run into that. So if you put an entry here, right, that's an opportunity for a breakout to occur and a trend to start. That's the daily time frame. If you look at the weekly, this is an opportunity to go lower too. You guys see that? Okay, so there's a multiple time frame opportunities there waiting for you. Okay, so this is, if you look at this Euro SEK, the daily and weekly are both red and they're ready to go. Everyone understand that? So this is definitely a 2 time frame sell right now. Now what you could also do is, those are the higher time frames. In order for this thing to push down, the lower time frames have to be sitting there trending downwards too. And if you look here, you'll see that the 10-minute, there's no strategy. 30-minute, there's no strategy. And the 60-minute, there's a strategy that's ready to go. And the 120, there isn't. And then the 240 is bullish. You guys see that? So there's a conflict happening on the lower time frames, which is pretty much causing this thing to consolidate a little right now. You guys see that? This thing will only start trending down when you start seeing red across the board. Because what's going to happen is the lower time frames and the higher time frames have to be the same color and working in conjunction in order for a trend to happen. Everyone okay with that? Okay, so from here you can see a really, really good glimpse of what's going on. Okay, and if you look right now at all the currency pairs, do you see red or green across the board? You don't. That means basically there's not many opportunities right now for long-term trends at all. There's opportunities for swing trading and scalping, but not for long-term, which are daily and higher. You have opportunities that you could sit there probably on the lower time frames, like the 10, 30, and 60, right? But you don't have any long-term trends right now. So when you enter a trade, you got to know that basically you're going to go in with limited profits because the trend is not going to last that long. Everyone okay with that? Okay. Also, if you look here and you see a lot of 5s and they're yellow, that means you're too late. The trend has already happened. Because when the fives happen and they're all yellow here, that means you're overextended. And notice on a daily time frame, you got a lot of fives and yellows. That means you're too late. A lot of the trends already happened. And now you have to be patient and wait for the trends to occur again. Everyone okay with that? Yes? Maybe? Confused? If you're confused, you got to ask questions. That's the only way you're going to understand. Okay? Now, that's very simple. So we pretty much have gone for trend trading very, very simple, haven't we? Okay? Great. Now, let's go for counter trend. Remember, counter trend signals I'm looking for are zeros and ones. 3 is okay, but I really like zeros and ones. Okay? The reason why is they get the best reward risk ratio as you could get for counter trend. Counter trend doesn't have that great a reward risk ratio like trend trading, but you still could get really good ones if you do look for zeros and ones. And what you look for in the counter trend scenarios is the higher time frames to basically be in a 0 and 1. When you look at the higher time frames, they're like the daily, weekly. Now sometimes you may view the 240 and the 120 as higher too, but if you think about it, these are your short-term time frames here, the 10, 30, and 60. These are your mid-term time frames, and these are your long-term time frames here. So ideally, if you got your long-term, which is your daily and weekly, in a 0 and 1, that allows you to sit there and go counter trend on the lower time frames. Does that make sense to everyone? So when you get a 0 here, right, you're looking for opportunities, trend patterns on the lower time frame. Yeah, 3 is going to be a little too late, Fred. You ideally want to look for zeros and ones. Reason why is they got a lot more room to sit there and move forward. 3 is kind of later on in the counter trend, so your reward risk kind of is not that great. Reason why is you're going to enter with a lot more risk. If it's a 0, then you have a potential of a lot lower risk and higher profits. It's the same way with the trend opportunities here. 2 gives you the lowest risk, okay, but lower probability. 4 gives you a higher risk than a 2, but a higher probability of being successful. Same thing with here. This gives you the lowest risk here, but low probabilities of winning. And this one gives you a higher probability of winning than zeros, but at a higher risk value. Does that make sense? Each one will have its own probabilities there. But basically, remember, in trading, if you go in with low risk, that means you got a higher probability of being stopped out because you're basically, you know that you're going to go in with low risk, not give it breathing room at all, and you just want to go in and sit there and take it. So you're going to have a lot more losses versus winners, but they're for very, very small. If you allow it more breathing room, that gives you a little more risk, you have a higher number of winning trades versus losing trades. Everyone okay with that? Okay. Govern that. Okay, so I'll repeat again. In trading in general, this is trading in general, nothing to do with a heat map. When you sit there and you go in with very little risk, you're going to have a lot more losing trades than winning trades. And the reason why is that you're willing to take a lot of little losses in order to get profitable, to get onto the right trend. But you're going to take a lot more trades on for small losses to sit there and try to get into the trend. If you allow it a little more risk, which gives it more breathing room, what's going to happen is you're going to have more winning trades than losing trades because you're allowed more risk. Some people are willing to sit there and take a lot of small losses in order to get into a trend. Some people can't deal with the loss factor at all. They rather have a little more risk so that they don't have X number of losing trades. So it depends on your personality and how you feel. If you feel like you're willing to take on more risk and don't like losses mentally, then you'll basically look for strategies 4 and 1. If you feel like you could sit there, you want the lowest risk, and you're willing to go for a lot of little losses, then 2s and 0s are ideal for you. Everyone okay with that? If you don't know what I'm talking about there, don't worry. Any questions so far? So let's go look at some of these. There's one here. Notice this is a daily is at a 0, right? And you got a trend opportunity on the CAD Switzy. Okay? So let's go look at CAD Switzy. This is basically, notice this has been going up, 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 up. Now it's starting to go down, which is a pullback, which is basically counter trend. Everyone okay with that? Yes? So counter trend would be going what? Bearish, wouldn't it be in this scenario? But yet, this is bullish. So that's not really counter trend. So you got to find a 0, 1. Let's go to a 1 and see if we'll find a better one. Here's one right here. This is a 1 on a daily. It's got a 5. Ideally, we want a 2 and a 4, but this has got a 5 on the 10 minute. So let's go look at that one. So that's the Euro Switzy. You see this one? Okay, so if you look at this one right now, the Euro Switzy, it's a 1 bullish. You guys see that? And counter trend is going down. So if you look at this overall pattern is still bullish. Right now it's consolidating. You guys see that? So if you look on a 10-minute time frame, this is basically a bearish opportunity right now to keep on going down. And what you do is you take the last pivot, a couple points below that, that'll basically be your short trade. Everyone see that? Yes? Okay. Now, remember, this was a daily. It's not the great counter trend right now, but this is a counter trend, believe it or not, because this overall pattern is bullish, and this is a pullback. Okay? And that's why I said the ones are okay. Let's go look at a number 0. That doesn't have anything there. We looked at this one, CAD Switzy. There's no opportunities there. We're not finding many opportunities at all. Let's go look at Euro DKK. Euro DKK on the weekly. If you look at Euro DKK here, which is right here, the 10-minute is bearish, and it's 0 on the weekly. You guys see that? So this looks like it's just sitting there going like this sideways. This is not really good counter trend either. And you can look at these charts and you can look at them, but they're not that great counter trend right now. And this one's exotic, so you're not going to get anything at all. Can you please look at ES? And okay, so let's go look at the future side. And we'll go there. So here's the futures right now. And if you look at the ES right now, you basically, if you notice, we're overextended on the daily, right? If you look here, we're overextended here with a 3 in yellow. And if you look at the that's the ES, you're going to find the same thing for YM, which is here. You'll see it's overextended, and so forth. And 60, I think, is the euro. We don't have the euro over here because we have that in the spot market. Michael, is that okay? If you look at the future side, do you see any multiple time frame opportunities here? Here's one right here, which is basically cotton, and it's going down. You guys see that? So if you look at cotton right now on the daily, weekly, the futures, did I pass it? Cotton. And if you look at here, this was basically a bearish opportunity here on the daily, weekly. So on the daily here, you'll take this last pivot low, a couple points below that would be an entry to go short. And if you look at the weekly, you can see basically it's an opportunity to go down too because it's a trend down still. Everyone okay with that so far? Now, you could go through. There's various symbols here. We got the Dow 30, the S&P 500, and so forth. Each thing works itself. Okay. Now, what I want to show you is that you have your heat map here. If you're just interested in trend trading, we have what we call, if you go to settings here, you have an email module that's attached. And what you could do is turn it on and off, and you could tell the system how often you want to receive these emails. Okay? When you get these emails, what's going to happen is you get an email like this that'll come to you from alerts@eiicapital.com, and what it does is it shows you multiple time frame opportunities. So each row represents 2 time frames. Okay? So if you look at this chart right here, and let's get the latest one right now. So let's get this one. Okay, if I pop this open, this is the currency, and I'll explain this. So each row represents 2 time frames. So the Australian CAD right now is a 2 time frame sell on a 10-minute and also a higher time frame. There was a question. Is it possible to use the heat map on the 10-minute, however, based on the entry on the 5-minute? What do you think? Yes, you can. If there's a strategy on a 10-minute, which is a 2 and a 4, either red or green, you do have the ability to sit there and enter on a 5-minute. The question is for futures. Yeah, you still can. Okay. Now, remember, each row represents 2 time frames. Everyone okay with that? So if you look here, if you find 2 rows with an instrument in there, the same instrument, that now indicates a possibility of 2 or 3 time frame opportunities. So if you look here on the EuroCAD, that's a 2 time frame opportunity there, and it's also in the 240, which is another 2 time frame. So this is a possibility of a 4 time frame buy. Do you guys see that? Yes? No? Maybe? Falling asleep on me? Yes, we've established with our research. We've already established what the higher time frames are for each one of them. You don't know what they are, but we do. We've already established that based on institutional research. So what happens is that when you see in any row here, this is your trading time frame, but it's also looking at a higher time frame, and there's a strategy there waiting for you also. So if you see it in if you see an instrument in one row, it's a 2 time frame buy or sell opportunity. If you see it in 2 rows, it's now a 4 time frame buy or sell opportunity. Can you explain how the email time frame and the heat map flow together? Yeah, basically what it's doing for is on the heat map over here, all the email module is doing is looking for the 2s and 4s on the particular time frame. So if you look at this email here on the pound Australian, and you go to pound Australian right here, this is a 1, okay? And that was a couple of minutes ago. That's why that's changed. I haven't got the latest one because this is set up for every 30 minutes, okay? But what will happen is that you would see a 2 or 4 on a bullish time frame on a 30 minutes for the pound Australian. So do you know how we said you look for 2s and 4s, and then you look at a higher time frame? This is automatically doing that for you. Yeah. So Andrew, I'm going to get to your question in a minute. Okay. So what's happening is the email module is doing all the 2 time frame hunting for you, so you don't have to do that at all. Okay. So this goes here and goes to this heat map over here, and automatically finds the 2s and 4s on multiple time frames for you, so you don't have to sit there and keep on looking for these number systems and finding those opportunities. And what it does is it finds like this time frame, which is your trading time frame, and a corresponding higher time frame, and make sure that the strategy is there. Okay, I'll go for that in just a minute, Michelle. Andrew, I haven't forgot about yours. I'll get to it in just a second, your question. Okay, so again, if you look here on this email here, there was a pound Australian opportunity on the 30-minute, and there's also an opportunity on the 240. You see that? This is 2 time frame opportunity right now because that 30 minutes is in sync to one higher time frame, and then this 240 is in sync with another higher time frame. So since it's in 2 rows, this is a 4 time frame buy opportunity that's available right now. Doesn't mean it's ready to go, or doesn't mean it will trigger. It still has to break the last resistance value, but this is a 4 time frame opportunity right now. So which time frame do you trade on? Well, you could trade on a 30 minutes or a 240. Okay. Now I'm telling you, you could trade on either one of them, and it's okay. The reason why is you may not have time to keep on looking at a chart every 30 minutes, right? So if you don't have that luxury to sit there and look at a chart every 30 minutes, then you'll sit there and trade it on a 240. If you do have the time, then you'll trade it on a 30 minute and keep your risk low. Remember, if you enter on a lower time frame, your risk is going to be lower, right? But you may not have that luxury to keep on looking at that chart. The reason why is you're involved with your family, you're working, or so forth. Does that make sense? So you could enter in either one of these, but it is a multiple time frame opportunity. Everyone okay with that? Yes? Now, what will happen is you will see, like right now, pound Australian is ready to go, right? But if you look at the heat map, it's now a 0. Okay? So the opportunity is gone. Behind this heat map is the actual signal server. Okay? When the opportunities are gone, they're gone. That means either the trade got entered or the trade got canceled and you never even entered it. There's a signal service going on behind it. So what's got to happen is on the pound Australian, here, this was basically a 30-minute opportunity for you a minute ago. And if you look, it was a bullish opportunity here, and what's happened is it was probably somewhere right around here, and you had an opportunity to enter somewhere up here. And it's already triggered the trade. Someone's already entered that trade, so the signal is no longer there. You're too late to the game. So the signals will go away either on it breaking the last resistance for a bullish scenario with a buffer, or it's starting to go the other way and we cancel the order completely. Does that make sense to everyone? That's when these signals will go away from this email. So behind the scenes, we have an entry value and a stop that's automatically assigned to each signal, and if it enters, it will automatically go away from here because that opportunity is gone, or if it reverses and goes the other way, it will automatically go and be removed from here because the setup is no longer valid. In the chart, there is a pivot gap of the previous day on the left. Do we consider it? No, the signal service is not looking at that gap at all. It's looking for the current pattern that's going on right now. And that gap is really, really far away. If the gap was right here in present time, then yeah, it will be looking at that. Okay? Any questions so far? Okay, take a live order basis on the live thing. Okay? So let's go here. This is a couple of minutes ago. And if you look here, here's a EuroCAD opportunity that's on the 120 and 240. Everyone see that? Okay. So let's go look at the EuroCAD. On the 120, which is the lowest time frame. And there's your opportunity here. So what you do is, this is a bullish opportunity, right? It was a 4 time frame opportunity, which basically was 120 and 240 were in the rows right here. Okay? And what you're going to do is you're going to come over here, take the last pivot high, a couple of points above that, that'll be your entry. Your stop would be the last pivot low, and a couple of points below that would be your entry. Everyone okay with that? Yes? No? Maybe? Okay? And that's the way you go. I'll show you the Ichimoku chart on this in just a moment. Run that again. Okay, so you hear in the email, it tells you have a Euro CAD is in 2 rows. That now gives you a 4 time frame buy. Okay? You then go to the chart, you go to the lowest time frame, which is the 120. It's a bullish opportunity, so you find the last pivot high, a couple points above that is your entry, and then you find the last pivot low, which is this one right here, a couple of points below that is your stop. Now this is using entry and stop based on pivots. It's a simple system. Everyone okay with that? And you could use once you enter here, you could use the major pivot here, and that's your target. And remember, this is a trailing stop, so as more pivots form, like when this goes up here and breaks that, this will be the pivot, so this stop will automatically move to here. Do you need to go to a lower time frame to enter? No. You can if you want, but you got to check the heat map at that point to see if there's an opportunity on the lower time frame. If you go to Euro CAD here, there is an opportunity on the 10, so you can enter, but that's bearish. You notice that? It's not even bullish. The lowest time frame you could enter going bullish is the 120. And the lowest is the 120s, you could see. The 60, 0, these are bearish. So this is the only time frames, and that's the lowest you can enter because look, you got a 4, 2, and a 2. So your 120s, 240s, and dailies, their strategies waiting to go on those 3 time frames. Brad, I'm going to get to your question in a minute. There was a question, Fred. I heard you say in a previous webinar you also big on money management 3 to 1 or higher. That's correct. Remember, I'm assuming you're going to go for your own money management system and so forth when you put your entries and all that. Remember, we're allowing you to use your own technical analysis and your own money management. We're finding the multiple time frame opportunities, but you have to determine based on your technical system where your entries are, your stops, money management, all that stuff. Reason why is I don't know you, and it's hard to sit there and come up with a generic one for everyone that fits everyone's personality. Anyone that does that, they're wrong in doing that. Because everyone has their own trading plan, everyone has their own money management style, everyone has their own entries and supports and what they like. You know, I could sit there and give you an entry and a stop, and you say, wow, that's too much, Minesh. So that's something we discuss on an individual basis, but not in a general call like this. Remember, a lot of people sit there and come up with a system and say, this is where you enter, this is where you exit. And remember, we talked about that at the very beginning. That's not correct to do that. Reason why is, you know, I could sit there with my system generate $1 million. I could give you the exact techniques and everything step by step what I did, and guess what? You probably won't be able to do the same thing. And the reason why is, how do you deal with losses? Can you deal with losses like I can? Can you trade with no emotions like I can? Right? Are you going to execute and stop thinking? There's a lot of variances between one human person and another, and each person has a different risk tolerance. You know, I'm willing to take a daily chart with 300-point risk. Are you? Most people think I'm nuts in doing that. But guess what? I'm shooting for 600 to 900 points. So my reward risk ratio is going to be 3 to 1 or higher. And I'm willing to do that. But most people are not going to do that. As soon as you tell them that the risk factor on a currency on a daily time frame is 300 points, they'll flip out and say, you're nuts. But no one ever bothers to ask me how many pips I'm trying to go for. That's the question from Michael was, are we using only minute charts or can we use tick charts and range charts as well? Well, the heat map, the lowest time frame we're going to go to is 10 minute. I'm definitely not going to go down to a tick chart. Most popular tick charts are 133 and 1600. You're more than welcome to use that and use the 10 minute as a higher time frame and you'll be fine. Okay? Hold on, I'm peeling off the questions one by one. It makes perfect sense. Each person has its... Yep. Okay. Do we only enter when there's agreement in 4 time frames? Norma, if you have a 4 time frame buy, that's when you enter. I'm actually greedy. I like for 5 time frames. I look for 5 time frame buys and sells more than anything. If I get them, I go right away. Then I look for 4s and then 3s. But the 5 time frames is the highest probability of winning. Are the heat map signals based on Ichimoku signals? Yes, they are. Can we take an ideal example for exit strategy? Govinda, no, because that's dealing is exactly what I told you. It deals with individual personality, and there's no way I'm going to go for that. Okay. Okay. I want to answer Brad's question where Brad was confused. Do I look at the heat map or the email? Well, here's my suggestion for you. If you're a pure trend trader, don't deal with counter trend at all. Okay. And you're patient, you sit there and just look at the emails. Okay? And the reason why I said you have to be patient is that it takes time for 2 time frame opportunities to come up. They don't always come up every second of the day. They may come up every 2 hours, 4 hours, 6 hours, or whatever may be the case. But you have to be patient. If you're a day trader and you're looking for 3 or 4 time frame buy and sell opportunities, you're going to sit there and have to wait a long time for them to come. Does that make sense to everyone? Okay, but then they go on hand in hand. This email module is derived from the heat map. Okay, so what I tell my students is that when they're learning, they're going to go solely off this email module, not even the heat map at all. Once they get experience in looking at charts and looking at these opportunities and finding out how these multiple time frames work, then they can sit there and go to the heat map and look at these individually. But this tells you when there's 2 time frame opportunities, there's 4 time frame opportunities, or even 5. Everything's here. You guys see that? The whole idea of this email module was a couple of factors. Statistically, it's found that retail traders, and even institutional now, because there's a lot of institutional traders that are just going nilly-willy all over the place without money management. Statistically, it shows the more you look at a chart, the more you're going to fail. Anyone heard that? Okay. Now, the whole concept on here is we took Ichimoku, which the meaning means at one glance, and to simplify trading. It means to sit there and simplify trading to a point you don't even have to look at a chart. You only look at a chart when an opportunity exists. So what our students do now is they look here. When they see a 2 time frame or 4 time frame or 5 time frame opportunity, that's when they look at a chart. Otherwise, they don't even look at a chart. This tells you the entire story of what's going on and where the opportunities lie. So our students don't waste time on looking at charts that there's no opportunities on. Why waste your time looking at something that's going sideways? What are you going to see in it? You're going to see misery and losses. That's all you're going to see. Why not spend time looking at and researching and trading things that opportunities exist? And that's what these multiple time frame opportunities give you. Does that make sense to everyone? Okay. Now let's scroll down. Let's go look here. If you look here, look at heating oil. Heating oil is in 10 minute, 30 minute, 60 minute, 120, 240. Oh, this looks like a bullish opportunity, doesn't it? Let's go look at heating oil. Let's see. Where'd I go? I think I missed it. It would help if I remember the symbols, but I have a crappy memory. There it is. HL. Duh. Okay, this is a bullish opportunity on multiple time frames. Look at it. If I put my entry here, watch this. That's the 2 hour. That's the daily. That's the weekly. It breaks it. It could retest this high right there. There's a 30 minute. Let's go look at a 10. There's a 10. You guys see that? This is a multiple time frame buy opportunity across the board on a 10, 30, 60, 120, 240. All it has to do is get to that level right there and go. You could start this on a 10-minute, so you could keep your entry down to there if you like. Everyone see that? Yes? Maybe? No? Do you want to guys see some multiple time frame opportunities that we've taken? These are last week, so I'm going to show you the daily chart and let you show you what would here's a currency trade that was a multiple time frame. This is a 5 time frame buy opportunity last week. Look at this on a daily. Tick, 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 tick. That's a currency trade right there. This right here was a future trade that I took. And if you guys listen to our weekly YouTube videos, I've been talking to people about watching and watching and watching this one. And finally, after about a month, this thing finally broke down. And look at that. I can't even find it now. Where's coffee? There it is. Look at coffee. This is a multiple time frame sell right there. That was an opportunity right there. That's the coffee. Here's a stock. This was a multiple time frame buy scenario right here on a stock. Went all the way that went up here. So you'll find all these multiple time frame opportunities, and the goal is to get into them and stay in them. And remember, these are trend trading, okay? These opportunities are not multiple time frames to go counter trend. Okay? These are trend opportunities where you're trying to get the maximum profits as possible out of the trend. Everyone okay with that? Any questions so far? If you scroll down, you can see the sectors. You can see all the sectors here. Believe it or not, at the beginning of the year, anyone knows what sector was the most popular that was showing up here in the multiple time frame opportunity? No one would probably ever get this. What was the strongest sector going into the 2012, believe it or not? Anyone know? Anyone guessing? What was the worst last year? Home builders, maybe? Take a look at these stocks. These are home builder stocks. Look at this move since the beginning of January. This was on multiple time frames on the sector side. And look how much they took off. This is Beazer Homes. HOV. Believe it or not, home construction was in a multiple time frame buy on our sector list at the beginning of the year, and all the individual stocks went on a tear. You would never think about that, but believe it or not, considering what's happened and what's still going on with everything in the world. There's a Dow 30. You can see the Dow 30 here. Okay? You can see there was opportunities a while back ago. Oh, sorry. This was one. Home Depot was on a multiple time frame opportunity list going up. So this was a move that you could get at the beginning of the year. Right now, there's not a multiple time frame opportunity at all. And then you got your S&P 500 list, which is down here. And you can find those multiple time frame opportunities there. Any questions so far? No? Everyone bored? Come on, wake up. I hope you find this exciting, because I'm not sure about you, but this is exciting to even get this. We've launched this in beta form at the beginning of January, and believe it or not, myself and my students are enjoying this ride, because to find multiple time frame opportunities, we're getting huge probability of success. Okay? And believe it or not, let me show you this. This is a video here, and I could send this to you guys here. I'll put this in the chat. You can look at this video, and this shows you this live trade that we took right there. That was there, and once you access YouTube, you could access all the other videos. We're continuously posting opportunities on YouTube of trades that we've taken for the multiple time frame opportunities. And you're talking about entering some of these trades with only 20 or 40 point risk and coming out with 300 to 500 points. What if I trade other markets, ETFs? How would I use the heat map? The heat map has the ETFs built into them too. So believe it or not, you have country ETFs here. These sectors are ETFs too. Dow 30, that's fine. Futures, you can find ETF for the futures. We are looking at adding a whole list of ETFs too, but that's going to be a little later this quarter. In fact, one of the things we've noticed is that we've done the sector ETFs based on the Dow, and we just realized the other day semiconductors not in this. So we're probably going to shift from the Dow sectors here to probably ProShares, which will pretty much give us the whole slew of ETFs out there. Yep, Milan. Yeah, it gives you tradable ideas. It's not telling you where to enter and get out. And the reason why is we don't want to do that at all. In fact, that's the biggest way for you to fail. Is if we tell you where to enter and exit, it's the biggest way to fail. Some people may agree with us, some people won't. But I'm telling you that based on the institution I came from, I'm telling you, if we tell you where to enter and sell, you're going to have the hardest time, believe it or not, understanding our signals, and they may never fit your personality to a point you never will win. Okay, so yeah, Fred, I'll correct that. So I guess someone posted that wrong. We have someone that posts all our stuff. So relating markets may be trending, just not on the map specifically. So related markets may be trending. Yeah. Yes, that's correct. In fact, what you can do is, let's say you're on the currencies, right? Watch. Let's say I only want to look at yen pairs. So if I just sit there and go to yen, look what happens. It tells me that all the yen pairs were trading. And look at them. They were strong across the board. You guys see that? They're all overextended right now, but yen is very, very strong. Sorry. Right here. It's weak, because all these pairs are strong compared to the yen. Okay, you could sit there and filter, and you could see, okay, how is Australian currency with everything else? And you could look here, and you could see mixed breed, so you could see the Australian is a mix right now, and you could see which pairs are the strongest out there by even doing filtering based on these currencies and looking at these heat map values. You guys see that? You also can sit there and take this to a whole new level. If any of you guys do pairs trading, okay, and pairs trading on any particular country, like we've been long for the last 2 years, we've been doing pairs trading where we basically have been long the German market and short the Paris market. And the reason why is there's a percentage gain that you get a huge advantage by always being long the German and short the Paris. And we've been winning over and over and over. You could do pairs trading just by looking at the heat map too. So there's various things you could do, and there's no way we could cover everything in this workshop here on all the possibilities that you can do with heat map. But all the data is here where you can go through and start looking at various opportunities. We've gone through and showed you trend opportunities on multiple time frames. We showed you how to look for counter trend when the higher time frames are basically in the zeros and ones. Then you could also go to counter trend on lower time frame. The other thing you can do is if it's overextended on their daily and weekly, you could go opposite on the lower time frames. And how can you tell if it's overextended? Well, if they're in yellow. So there's various things you can do, but we've only touched on some of the things that are available that you can do right now. But trust me, there's many, many different ways you could use this heat map. And I personally have done various things with it where, one, I look for 5 time frame buys and sell opportunities. That's my #1 mission on the email module, is to look for 5 time frame buys and sells, because those are long-term lasting trends where on average you could get 300 to 600 pips easily by entering on the lower time frame with a very low risk. So if you got a 5 time frame buy and sell, you could sit there and get close to 500 to 600% profit based on your risk. Notice I said based on your risk. Okay? So if I'm risking 40 pips, I could sit there and turn that and get 400 to 500 to 600% easily gain based on the risk that I'm entering if it's a 5 time frame buy or sell. Because it's in sync across the board. Yes, I'll be sending the webinar to everyone. Everyone okay with that? Yes, I'm going to touch on the stock scanner in a sec. So everyone okay with the heat map so far? Okay. Now the stock scanner is something we have, and in the stock scanner, what this does, this searches 7,000 plus instruments in the U.S. Okay. There's no way we're going to provide a heat map for 7,000 instruments. There's no way. In fact, it's ridiculous to do that. So what we did was we provide a scanner, and in here you can look for the strategies, the Ichimoku strategies, which are 2s, 4s, and all that. Okay. And what you could do is you could filter based on symbol, beginning price, end price, average 60-day volume, beginning or end, or the day volume. Okay? Everyone okay? Any questions so far? So this is simple. This all is doing is looking for, you can sit there and look for 2s and 4s right here, and then just sit there and scan, and it'll find all the instruments. It tells you when they're right here. They'll tell you right here if they're bullish or bearish, the closing price, everything here. Okay? But believe it or not, you could pretty much just live on the heat map. A lot of people don't use a stock scanner. They pretty much just live on the heat map. Reason why is a lot of people want to sit there and trade like the Dow 30 because they're all dividend stocks. Or they're going to the S&P 500. So between the Dow 30 and the S&P 500, it's been sufficient to people's needs. In fact, we never had any of these at all, the Dow 30, S&P 500 country and sector. We only had the stock scanner. And what happened was a lot of people came back to us and requested that they didn't want to go into the stock scanner. They actually wanted us to show them the heat map for the Dow 30, 60, 500 international ETFs and sectors. So that's why we did that. Jay, right now, Jay had a question. I focus on 10 ETF markets. Is there a way to load that in the portfolio and follow it? Jay, at this time, no. But what you can do is send me the list of those ETFs because I'm evaluating on what ETFs to put in on a heat map, and I could look at putting those in and make sure I have them there. But in the future, we will be migrating the website where you will have the ability to put your individual stock portfolio in there, and it will automatically send you email modules on your stock portfolio. But that's not probably going to be to the end of the year. Okay? Because we're doing that for a lot of institutions right now, where some institutions only look for particular instruments. So we're doing that for the institutions, but not for the retail market at this point. Any questions so far? No? Ah, that's good. Okay. Now, I'm going to show you guys something that most people don't even look at this website. I don't know why. If you scroll down, you got Twitter here. But forget Twitter. Let's look over here. I'm going to shrink this down a little. You see these charts right here? Fred, that's good. You're less confused. Fred, you're supposed to say, I completely understand, not less confused. Okay. Okay. Now, this is dealing with stocks, people that trade stocks, okay? And, you know, if you're trading currencies, this won't affect you that much. But if you're dealing with stocks, this is actually a market sentiment that's very, very good. But a lot of people don't even look at this, okay? Now, the top graph is the daily time frame. The bottom is weekly, okay? And what happens on here is this shows you how many instruments are breaking out of the cloud. That means they have changed settlements. So over here on 2/17, which is today, sorry, that was Friday because today's the market's closed. On Friday, 960 instruments out of 7,500 plus instruments change their sentiment to be bullish. 580 change the sentiments to be bearish. That's on a daily time frame. You can see that this number is growing. I don't even look at that. What I look at is here on the weekly, because this kind of gives you an idea of long-term where the markets stand. And if you look here, this is the first week that the bears actually are starting to take over. There were 620 instruments on a weekly time frame, which are long-term charts, which has basically now changed sentiments to be bearish, and only 395 that changed sentiments to be bullish. So this bullish momentum is finally flipped over here. You guys see that? Now, if you look at that, that's flipped over. And if you look at the charts for all the futures, like the E-mini S&P 500, the Dow, NASDAQ, well, not even NASDAQ. You can't look at NASDAQ. But a lot of them are major resistances. So a lot of them are major resistances. And all this is also this weekly sentiment, which looks at 7,500 plus instruments, has now changed. This is now telling me that it looks like we're about to top out in the market. You guys see that? So if you look at my YouTube videos that I cover on a weekly basis, where I cover the global stock markets, you'll see me telling people to take profits now. Any questions? This right here is going to be expanded where you're going to be able to choose currencies, Dow 30, S&P 500, and so forth. Right now you can't choose what instrument you want to look at. This looks at all 7,500 stocks, but you will be able to sit there and do this on the S&P, Dow, currencies, and so forth too. Any questions so far? No? Maybe? Okay. Now we're pretty much getting close to wrapping up, so everything else is pretty simple. If you go to Market Outlook here, this goes through YouTube videos. You know it's 219. That's today. No, that was yesterday. Sorry. These are my weekly YouTube videos that I create. I do one for the currency market, I do one for the futures market, and I do one for the stock market. Okay, and you could go there and you could look at how I use Ichimoku and basically cover all the markets out there. Okay, if you go to the video tab here, these are video tutorials that we have on Ichimoku, how to backtest with Thinkorswim. A lot of various tutorials we have here and so forth are all there. And if you click on help, this is a tutorial on basically the heat map and everything that we've been talking about. It's all also over here, another viewpoint. Okay. If you go to the education section, there'll be more educational videos there and links like to installing Ichimoku indicator on TradeStation and so forth. This is our blog, forum, and wiki. You can access there. You can access our testimonials, and also you can find out more about me here and about us. You could also access Facebook, Twitter, and YouTube from these links up here too. Fred had a question. How do I access? How do I do that for currencies? This right here, right now, is only for stocks. It's supposed to be available, I think, by this week or next week, where you'll be able to sit there and do this for currencies too. Okay. I kind of flooded my web program with a lot of stuff, so he's kind of behind on some of this stuff. Any questions so far? No? Okay. Now, what was the one pair? I think we looked at, what was the instrument that we looked at in the currency side? Pound, what was it? Let's see. Let's go look at this is the latest email right now. This came across 8/21. And if you look here, EuroCAD is in 2 time frames. So let's go look at EuroCAD. And this is the normal charts that we just looked at to go with pivots. And I'm just going to add the Ichimoku indicator for you. And if you look here on this Ichimoku indicator, everyone see it? Okay? Your stop would basically be the green line minus a couple of points, so your stop would be roughly right there. And your entry would be this last pivot high plus a couple of points there. So that's your entry based on Ichimoku. And your stop is always that green line minus a buffer. And that's your stop. And it's a trailing stop, so as that green line moves, it moves up. What time frame are you on? I'm on a 2-hour right now, Fred. If you're a pullback trader, you have the ability to enter right now here at a pullback right there. Or you could enter at this green line too, and your stop is still there. So if you're a breakout trader, then your entry's there. If you're a pullback trader, you're going to put a pullback order there or there with this stop being here. Okay, and as this green line moves, that's basically your stop. You guys see how Ichimoku fits into it? Pretty simple, isn't it? Remember, the whole foundation is our trading, but mine and my students' trading is all based around one thing: keeping everything very, very simple and playing the probabilities. Okay? That's the whole structure of trading. The problem now is that everything in Wall Street and around the world, people have complicated trading with so many indicators and everything that's going on. And it really, really is making things really tough. And the problem is that trading's supposed to be simple because you're supposed to be playing the probabilities, right? So our whole idea is to use Ichimoku to find key support resistance values, know when to trade, know where the entries are, the stops are. So we use Ichimoku as a tool for money management and entry and stops. And then what we're doing is we're using the heat map now to find high probability trades by looking for multiple time frame opportunities. And that's what we're doing. So we keep it simple by using Ichimoku, and we've taken it one step further by creating a heat map and the email module that allows us to sit there at one glance, find multiple time frame opportunities without even looking at a chart. So here we could find multiple time frame opportunities right here without even looking at a chart. So now we go in, we go look at the chart right away, we determine within a second if an opportunity is there. If it is, in 2 seconds we put the order, and then we move away and walk away from it until the orders get triggered. So it's a 3-second rule that we believe in. Anything longer, you're going to start arguing with your first instinct, and you're setting yourself up to fail. Any questions? No? Well, that's it. We're pretty much wrapped up for today. If you guys have any questions, please don't hesitate to email me. You could just find my email here, but it's basically mpatel@eiicapital.com. Okay? Thank you and have a good day.